Hello, everybody. It's Bob Anderson, and today is November 26, 2025. I have this video is like a three-part video. It's short, but anyways, one of the things that a lot of people have been asking me to do is just kind of go over my belief of what instruments. I have 5 instruments that I follow in our little live YouTube thing. The NQ, the YM, the RTY, GC, and the ES. And I've had people kind of ask me, well, some people seem to focus on certain instruments, some people don't, blah blah blah. And I say, well, they have a different personality, and so you got to kind of figure out, in my opinion, which one fits your personality. And so I'm going to touch on each 5 instruments here in this video, as to my opinion of these instruments for their personalities, and why I trade some more than others. Okay. The other thing I want to talk about is that in our live stream that we've been doing here for about, I don't know, maybe a month or so, I have seen a significant number of traders improving on their ability to trade, manage their trades, recognize good trades versus bad trades, versus my perceived strategy as to what you should be looking for, or when you should be looking for it, or whatever. This morning, before we even got to 8:30, it was the exact scenario of one of the things that I talk about. And I just want to show it here and just show you the simplicity of certain things. Like, because trading is daunting for a lot of people. I get that. I totally get that. Okay. More than you can imagine. I get that. But it doesn't have to be daunting if you break things down into certain simplicity things. And that's kind of what I keep trying to emphasize for traders. I'm sitting here looking at the YM doing exactly what this part's going to be about. I mean, it's ding, 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 ding. I mean, it's amazing. So that main thing is to look to your left. I tell people, okay, first of all, understand conceptually what the lines are on our charts, our 1-minute gold line, our 5-minute red line, our static lines. Understand conceptually what we're supposed to look for based off these lines. And then once you understand that, look to your left, meaning look at price action coming to current situation, and determine which of these lines seems to be working, what seems to be happening, what are the algos kicking off of, and then duplicate that going forward till it no longer works. Okay? And you will find how much your trading will improve, because they're not very good at hiding what they're going to do. As a matter of fact, I laugh about it now. I've gotten to the point where I laugh. So let me show you an example quickly as how I just, the day before Thanksgiving, before we even got to 8:30 in the morning, how I looked at gold and I went, oh crap, I wasn't even going to trade. I came down here to work on my some quotes for some houses I'm working on. And I looked over and I'm like, oh man, all right, I got to take this trade. I've got to take this trade. And it went bing, bing for $400. I'm going to show you my entry, my exit, and I'm done. So I made a quick $400 today without even thinking I was going to do anything. And I want to show you how simple it is, how simple it was, based off of look to your left and understand the basic premises of my lines that are on these charts that are all free lines. And in the description of this video, you'll see what my settings are for all these lines right off of Ninja. And there's also a link to my 5 videos of what the strategy is. I mean, it's pretty basic. And there are people that have never, I have people that have messaged me that have been trading for 20 years that are not consistent, are now finally consistent by just these simple, basic things. So anyways, let me show you what I'm talking about. Hold on. Okay, so here is gold. Gold is a market that opens at 8:20 in the morning, blah, blah, blah. Anyway, so I woke up this morning, got to my desk, and I was going to start doing my my real job. I have a real job. And I happen to see the gold chart. Let's just say this is it right here. This is basically where it's at. And I have this static line here called the prior day's high. Okay. It's the prior day's high. So it was the high of the market yesterday in gold. And when I say yesterday, I'm talking about from 6 p.m. This is all Eastern Standard Time. So 6 p.m. Eastern Standard Time, the day before, when it actually opens, not 8:20 in the morning yesterday, and then all the way through to when it closed, technically at 5 p.m. yesterday. Okay, that was the highest price of the day. And I have settings for that. It's in your description below. But anyways, I happen to see price hanging out up here in the high, and it rolled over and it broke down. Now, I saw this on the chart. I didn't see this live. And it broke down below that line. See, it came down to the line and hung out, but it never pierced it. And then it broke down below that line, came back up, and boom, and then bam, immediately after the close. These are 1 minute charts. After the close of this candle, and this candle broke, boom, it went down almost $1,000. Okay, algos kicking in. This is at 7:45 in the morning. Okay, and this setup right here, where price goes across one of those static lines that we monitor and comes up into that line, we're looking for a rejection of that line. That's the whole reason that they deliberately drove it through that line, is to then run it back up and test it. The concept being support becomes resistance, resistance becomes support. Okay, boom, there it is. So now I'm sitting here and I'm like, well, crap, that's pretty cool. That's cool that worked. That's awesome. But then time's going on, and I'm working on my quotes and stuff. And then I look over and I see this. Now we've gone back over it, that same line, and we've rolled into it right here. Bam. And I'm like, oh shit. So support becomes resistance, resistance becomes support. So in both cases, we had this gap right here. When price went through, came up. When price went through, came back. So we're coming off recent highs. That's the key. Recent highs. This is a recent high. That's it talks about that in my strategy thing. This is a recent low. Talks about what this line right here means. Boom, boom, boom. So then we come back over here to the next candle. I'm like, okay, well, maybe it's just going to roll over. Maybe it's just going to roll over. No big deal. But I'm sitting here watching it. And then all of a sudden, this candle right here, this green candle, consolidates. These are all 1 minute candles. It consolidates inside the range of this candle right here. And it's still has a wick above the top of that line. And I said to myself, damn it, this is it. As soon as this candle breaks, if price breaks above that candle, we're gone back up to here. And bam, I'm in. Look at the big green candle. Now there's a lot of whippiness because, it's early in the morning and gold, can get a little dicey. But it up and then bam, bam, done. There's my $400. And it's the day before Thanksgiving. It's the day before Thanksgiving. So then I go and get some coffee, and I've got people visiting because it's Thanksgiving. So I'm talking to them, before they go do some errands and stuff this morning, whatever. And all of a sudden, again, look to your left. Look to your left and determine what the future holds. So then we come across here. Now we have news at 8:30. So this big red candle, of course, we don't want anything to do with things when news is going on. All right, so we got all these big candles here because it's news time. 8:30 was news and da-da-da-da-da. So we're just waiting for if we're going to trade, we were waiting for the market to give us a sign again, a sign that we need to take a trade. So again, look to your left, this and this, all right? Wham, down we go through the prior day high again, break this pivot right here to the long side. This is a bottom pivot to the long side, so we break it to the downside. All of a sudden, bam, bam, bam. Guess what happens here? Guess what happens here? Anybody want to guess? Boom. There's another $400 right there. Ching, 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 right there. I mean, it's rinse, wash, repeat. And I talk about these things all the time. How simple it is to see that stuff. Now, I didn't take that. I'm upstairs, talking to people, sending them about their day. And this pattern happened again. So it happened 3 times this morning, which is a standard setup in our strategy. Crossover, boom, boom, down. Crossover, boom, boom, up. Crossover, boom, boom, down. I mean, rinse, wash, repeat. All right. So now I'm going to talk about different instruments. So give me just a second. Let me just a second. All right. I'm going to talk about different instruments and different personalities. All right. So hold on. Okay. So I'm going to kind of group these things together. Now, remember, the ones I'm going to talk about are GC, which is gold, NQ, which is the NASDAQ, YM, which is the Dow, RTY, which is the Russell, and the ES, and which is the S&P 500. So and so I'm going to put them in kind of categories because I think they are categorized. And I'll give you a perfect example. One of the most successful traders that I have in my group, hands down, who 6 years traded the NQ, has then learned the strategy I talk about, and he's finally a profitable trader, a highly profitable trader at that. I told him, because he's so focused on the NQ, I told him, you ought to look at gold, and because you're going to get bigger swings, you're going to make bigger money if you can catch the rotations right than you will in the NQ, and it's not as frantic. So he has switched over to gold like probably about 6 months ago or so, and his profits have only accelerated. I mean, highly accelerated. But anyways, so 2 instruments that I kind of think are relatively similar is gold and the NQ. If you're going to trade gold and the NQ, you've got to give these trades room because they are highly volatile. You've got to have patience to let them go to targets off that volatility. So, like for example, the guy that's in my trading room, this trade right here, that crossover Tesla trade I was talking about before, he would have been trying to take this for $1,000. So he would have had to stop way up here because he's trading $1,000 plus trades per contract. So he'd be trying to go from here, hold on here, down to right there as his target. Okay. And in that style, what he's looking for is pivots that pivots. So this is the first pivot. So he He would have his stop here, entry right here, and he would just let it roll down. And when it came back up, he wouldn't be flinching because his stop is still way up here. And then he'd be waiting for it to break down. As soon as it broke, as soon as this up candle broke back down, then he'd have his stop below this pivot. And then when this up candle broke back down, he'd have his stop here. And then he would be riding this for bigger targets. That's not the way I trade because I don't have the nerve to do that. But this turned out to be $1,000 trade to the downside with one contract per contract. All right. So, but to trade, say that way, you've got to understand how this market works. It goes back and forth and back and forth. I mean, if you look at this, like this thing, bing, up through your high, then back down, and then bing, up through your high, and then back down. I mean, it's violent. These two instruments are very violent. So you have to be willing, in my opinion, to trade them successfully. You have to be willing to take, quote unquote, bigger losses, but also you have to have the patience to take bigger wins. Very volatile. I don't suggest either one of these two for new traders. Okay. I'm going to get to what I suggest for newer traders. Okay. In a minute here. All right. So that's the personality of these two. This one here, the NQ, is even more crazy than this one. This one, I do believe gold is more rhythmic. That's part of the reason why I kept telling him you need to try, instead of the NQ, you need to try gold. It's a little more rhythmic. It has a little bit more consistency to its rhythm when it moves. And then when it does move, man, it moves beautifully in your direction. So my point being, like, this swing right here is $400 immediately, before you even had a pullback. That gets you in the right side of the trade. You can manage yourself, from your stop to your target, whatever. That's what I like about gold. The NQ, you just have to trust that the direction you're taking that trade is what they're really trying to do. And you just got to sit there and pray because it'll sneak down and clean out some more stops, and then it'll reverse violently. I mean, it is not as deliberate out of the gate on my trades, in my opinion, as gold is. Gold is more deliberate out of the gate than NQ, because the NQ has a lot more volume in it, has a lot more manipulation. Okay, so that's the difference between those two. Again, I do not recommend either one of them to people newly learning my strategy or any damn strategy. All right, next is the YM and the RTY. Now, I'll be perfectly honest with you. Both of these are wonderful instruments to trade for somebody trying to learn the strategy, trying to build up some confidence so that they can tolerate some of the more. And by the way, the NQ did it. The NQ did do its little red line trade. For those of you that follow my strategy, look at that. Pierce through that red line and then boom, off it is. That I'm sitting here doing this video instead of taking trades, but it did it. It did it just like we talk about, straight from the high. This is doing this live while I'm doing this damn video. So straight from the high, right here, if you get a deliberate move to that line right there, boom, boom, boom. And it did it. It did it right here while I'm doing this live. Anyways, while I'm videotaping this live. Anyways, so the other instruments are the RTY and the YM. And I like both of these instruments for people to quote unquote learn the strategy on, per se, because like I talk about here. Here's an example of the RTY. Bing, 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 bing. It's moving more. I call it moves more in a straight line. I talk about it moves more in a straight line. So it doesn't have as much of the herky-jerkiness as the NQ And it's a little bit more of a hybrid of gold. Gold does move a little more in a straight line definitely more in a straight line than the NQ, but it moves in a straight line. So like here's that trade we talked about. Here's the crossover. This one is not as good as this one because we broke this pivot here, crossed over, pulled back up. Here's our static line. Boom, 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 boom. There's our money. This is just today. I mean, I'm not cherry picking this. This is today. I'm not cherry picking, showing you these charts. And then you could just follow the back of the candles down to this pivot is where you should have expected, because this is the pivot that threw price up. This is the spot where you should have expected price to kind of cycle, because this is where a lot of people will have their targets. And if it's going to continue, it'll hit right up on this 9 EMA and then roll back down. And that's exactly what it did. But anyways, it's very predictable. This instrument is very predictable. This instrument is very predictable. Both of them are very predictable. By the way, in the morning time, here's your crossover of your prior day high. Boom, bam. Here's from a new high straight down to your prior day high again. Boom, bam. I mean, it doesn't matter what instrument you're using. The patterns still work. The ones I talk about. Doesn't matter which one of these instruments you're using. It's just which one can you tolerate the violence. And this is very smooth. Look at this. This is an inside candle, just like the gold one I took. They ran it down below, then boom, up it went. Shh, there it goes. This one, boom, boom, shh, there it goes. I mean, come on, man. So anyways, so both of these instruments, I personally, if I'm in a slump trading, like I'm getting losses, okay? Like gold's just kind of snapping me and I'm losing some money. I migrate back to both of these, because these will move smoother for me, and these will get me my money back. Okay. So I love both of these instruments. This one really is, this is the one that, yeah. Anyways, so RTY, YM, both of them are great. By the way, here's a 1 minute gold line setup right here. Boom, boom, and down it. This should go back down to here. Anyways, so the last one that I want to talk about, the last one is the ES. So let me pull that one down here. So the ES, quickly about the ES, I tell this story to anybody that'll listen. This is when I first started trading prop firm money. I was, for all intents and purposes, cowboying it with gold and oil and and NQ like a crazy man. NQ, just that's insanity until you get your feet stabilized. But anyways, I focused. When I started this YouTube channel, I told myself, Bob, you need to just pick one trade. You need to just pick one instrument, and you need to find a way to be consistent with that one instrument on that one trade. And so it became, I decided it was going to be the ES. And back in those days, so let me just clarify something for you. Back in the days that I started this YouTube channel, I was using Apex, and Apex had this, at the time, everything changes, but at the time, for you to pass an eval, I used $50,000 counts. You had to make $3,000 to pass, but you had to trade for 10 days minimum. You had to trade for 10 days minimum. Okay. By the way, ES is about to prove my whole story right. See this setup? This is one of the setups I'm going to talk about right here. So anyways, so, and look at it. Bing, bing. I mean, this stuff is literally happening right in front of my face while I'm showing you these videos. Anyway, so, the ES was what I felt was going to be the most consistent on the 1 minute gold line trade. So, and what I did was for 10 days, I traded. I don't remember how many days it took me to get the $3,000, but then I passed, and then I traded my PA account, and back then you had to trade your PA account for 20 days before you can ask for a payout. So think about that, 30 days. Well, anyways, I went on a streak. It's documented in this YouTube channel that I went like 35 days. It was over 30 days, 35 days, I think it was, in a row without losing money. And the only trade I took and the only instrument I looked at was this ES. And the only trade I took was the 1 minute gold line trade, which is where price crosses over. So where price, now this is pre-market stuff, so we're kind of a little slow, but you got to have price cross over the gold line. Let me go to yesterday. I mean, it did it right here, but I want to kind of show you in a pattern here. So let me go to yesterday's pricing because I want where the market's actually open. All right, because I don't recommend any of this equity stuff really in the pre-market until you know what you're doing. So then the market opens, all right? And there's certain things you got to avoid. Like you got to avoid trading into these lines. I talk about it in my strategy, blah, 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 blah. So you got to be in open space. So see, we're sitting around these lines. And then all of a sudden, we started trading in open space. Where's open space? Well, we crossed over here, created a new high, created a new recent high, boom, boom, on top of the gold line. And then off we go. And that's an example of the trade that I would take in the ES. And it's just still going. Went up through the high, which I talk about that. When you take this trade, you should anticipate it going back to this minimum, its pivot. So this trade here is 33.40. That's 7 points. That's 7 points. That's 7 points. Holy shit, that's 7 points. I didn't realize it was that much. So that's 7 points, $350. Then you have this right here. So you have price below this gold line here, a whole candle, open and close below the gold line. So now it's crossing over, creates a new high, sits on top of that gold line. Bam, there's your trade again. That's it. There was two of them right here after we got out of the consolidation mode. Boom. So this one here is 51, and I'd be looking for like 4 points. So I mean, that's what I would do, which is $200. So 51, that'd be 55. So where's 55? That's 55 right there. 4 points. When I was doing this, I was targeting to get back to the high. You want to have space here, get back to the high, boom, boom, and then if you want to go for more, like 4 points, that's it right there. And that's exactly what I would do. I wait for price to reset, cross over, create a smooth pullback to that gold line, and then bam, there's your trade. But you had to sit there and be patient. You had to sit there and wait for, here's your crossover right here. See, this is your candle, all completely below that gold line, this gold line right here. Price runs up, sits down right on top of it, pushes it back up. And then boom, there you go. And then it did the same thing. Reset it right here, cross back over, boom, boom, boom. I mean, it's just, and that's the only trade I took. And I got my first payout from a prop firm by just doing one trade, one instrument, and the one I did it with was the ES. Now, do I trade the ES currently? No, I really don't. I mean, I've taken some ES trades in our live stream, but I mean, I don't focus on the ES. I pretty much use the ES just as a determinant with the NQ. If the ES is about to have problems, like if it's about to run into some resistance area or support area or whatever, then I know the NQ is going to have the same problems. So I use it as a guide between the two, because these two, if you'll notice, green candle, green candle, green candle, green candle, green candle, green candle, red candle, red candle, red candle, red candle, big green candle, big green candle. The ES and the NQ have a tendency to move with each other. And so I can't take a trade in this one, a specific direction with confidence if this one is in a situation where it's about to be in resistance. Let's see where these reversed. 911. Where's 911 on here? 911. See, both of these reversed off that red line at the same time. That's funny. But if you saw this one, knowing it's reaching for that red line, you would know that this one is going to stay here until this one does it. So like you can use both of them to help you. But I only trade one. Like I'll only trade the NQ mostly. But anyways, that's my analysis of the 5 instruments. It's my opinion on how, whatever. The ES is something that quite a few people in my trading room do trade, my live trading room, but they, it's very predictable off of my strategy. It's very consistent. It's just a little too slow for me. So I don't really focus on it. But anyways, that's it. That's my video. I want to wish everybody a happy Thanksgiving because tomorrow is Turkey Day. And if you want to watch my live streams that I start them at 9:45. They're free. They're on YouTube. They're delayed a little bit, like, 10, 15, 20 seconds because YouTube is, everything's delayed with YouTube. But I mean, it's free, and I just kind of talk through what trades I'm taking or what setups are working or whatever. Everybody have a good day. Have a great Thanksgiving. I'll talk to you later. Bye.